this. Yep. So we can begin. All right, good. All right, so welcome one more time to today's class. Before I kick off, I'll just share my screen and then we can just take it on from there. Okay, cool. So welcome to today's class. So basically we're continuing from where we stopped the last time. I want to believe that you're getting a ton of value from all that we're doing or all that we've been doing since we started these classes. And I want to just say that, of course, usually I expect that in the course of the mentorship, some people are going to drop. But then those who actually stay will be the ones who get the value and hopefully run with it. And then in a few years' time, people will say you're lucky, but you're committed to learning. So anyways, we're here. And so we'll continue to build on what we did last time, structure, and today we're going to be actually focusing on structure. I'll do an overview of structure, market structure, and also deep dive a little bit into demand and supply, and how you can identify that in the market and how you can use that in the market, right? So to begin with, as you can see on my screen, you're already familiar with this. I usually use, I divide my screen into three. So my screen here on the left is usually a 4-hour, time. It's usually a 4-hour time frame. And then here at the top the top right here, you have the 15 minutes time frame. And then down below here, I have the 1 minute time frame. Now, if you're using, of course, the free what do they call it? The free version of TradingView, you may not be able to split, I think, up to 3 or thereabouts, something like that. But at least you have an idea, of course, on how all of this works. I had also said, anyways, I was going to use TradingView to explain a few things. So let me just go to the TradingView. The TradingView platform without accessing the paid version that I have. So I can replicate what you most likely have on your own screen. So just give me a sec to switch to that. Okay. I'm trying to do that. 1 second. All right. So let me bring this up and hopefully it works. Okay. So, yeah. Okay. So the TradingView on the 1 minute. Okay. Now, I think I'm just going to stick with this, right? I'm just going to stick with this one. This is a paid version. If you're using the free version, you observe that you won't be able to split your screen into 3. However, you can go down to the 1 minute, you can go down to the 15 minutes and 4-hour, which is perfectly okay. So just that you'll be able to see all the 3 screens, all the 3 views at the same time, or you'll be able to break it down and go to any of this time frame. So it's perfectly okay for you to navigate that way. Now, so building on market structure. So let's just do a quick recap, right? So I'm on the 15 minutes here. I'll just expand that 15 minutes and use that to illustrate what I'll try to drive home today. So let's do a little recap of market structure. Now, remember, we started, we've gone through this already, higher highs, lower highs, higher highs like that. And then, it basically continues, right? Oh no, why is it that this thing continues going off? Sorry, let me try this again. Since there's something that's constant this, it doesn't, when I try to escape, it just disappears. So what do I do? Okay, let me just leave it like this. Anyways, so we've gone through this earlier. So the market, every now and then trends, and this is a trending market. So you have lower highs, higher highs, lower highs, and then the market continues to go, in this zigzag motion, in an upward trend, right? Going upwards, that's an upward trend. And then when you have this in the reverse, you basically have, the market doing this, right? it comes down, it makes a low and then reverses, you know, a lower high and then makes a low and then a lower high and then makes a low and then a lower high. You know, the market does this. This is, of course, a downward trending market. We've already, you know, gone through this. Now, when this move here takes out this previous low, it is called a break of structure, right? That means it broke the low. That means we call it a break of structure, a BOS, B-O-S, right? And then when it also makes a new low here, it reverses to the top, it reverses back, it doesn't take out this high, and then it continues downward trend and then takes out this low. We also now have a new break of structure, and then it continues, you know, giving us that type of structure again and again and again. Now, that is basically that, right? Let me use under tool to see if I'll be able to get some success with that. Nope. That's not going to work too. I'm not sure why this is, all of a sudden, this is behaving the way it's behaving, but I'm not sure why. Let me see if I'm going to have success with another one. Let me change the color to, okay. Yeah, let me see. Sorry. Okay. Okay, yeah, I think this might work for me. Okay, cool. Oh no. All right, so let me just take that out. Okay, cool. So we can use this. Right. So now, so we have this. So this is just a quick recap. So we sort of established this. Now, this high was taken out by this move here. So that's a break of structure. That's a BOS, right? So normally you see it something like this, BOS. Okay, you see something like that. And then it happens again, right? And then this high again was taken out by this move here. And that's another break of structure. That's also a BOS, right? And then it continues like that. And then this new high that was formed here was now taken again by this move, you know, this push here. And that's another BOS, right? Now, when the market trends like this, okay, now this is basic market structure. Now, when the market trends like this, for us as traders, all we're interested in is for us to be able to catch, you know, this move here, these lows. This is what we're really interested in, for you to be able to catch these moves. If the market is trending upwards, right, you want to be in a position where you're able to catch these moves that now, you know, returns the market to the, you know, the direction of the trend and takes out the previous high. That's what you're interested in, right? So this is basically how we trade. So break of structure and all of that. Now, the first time, if you have a trending market like this, if, for example, this, let's assume that this was actually a downward trending market like this. It was coming down like this, right? And then it came here, and then for the first time, it now started reversing like this. It didn't take out this previous high, but now it now broke down. And let's say, sorry, let me try to see if I can adjust this. Oops, okay. My apologies. The tool I want to use is not working, so I just have to make do with this. Anyway, so let's say this. So this was the previous high here, right? So the market came back here. It didn't really take it out. Let me just do it in such a way that it will take that high out. Sorry, it's a mess, but we just have to deal with what we have. So anyway, so this was a previous high. So this was a downward trending market, obviously. And then from here, the market sort of reversed and took out this previous high. Now, this first high that was taken out is called a change of character, right? And you always see it has chalk like this. So it will always be denoted as chalk, right? So let me try to make this a little bit larger. Okay, so we'll always denote it as chalk. That means the first time the market reversed to sort of take out the, you know, the high, the previous high, that is called a chalk. Now, subsequent, break of structure or subsequent shift in trend will now be called a break of structure, right? It's very important to understand that the first shift is called a chalk. The second shift is called a break of structure, and then any other one is called a break of structure. Now, how about if the market stops trending upwards and then decides to reverse from here, right? And then it reverses and takes out this previous low and then now continues downward like this. Now, what happens? This new low that was now taken out here by this move here would also now be called a chalk. Let me remove this line, okay? So this move here will now be considered a chalk like this. So you see that, so that's a chalk, right? And then every subsequent, break, every subsequent, downward trend or downward push will now be considered a break of structure, and then it continues like that. Now, this is predominantly the basic market structure on how price moves in the market. Now, of course, there are times when price would also be ranging. And what I mean by that is there are times when price will just be doing something like this. Sorry, let me do that like this. Like this. So price will just be doing something like this. In other words, there is no clear trend in the market. So you may have situations like this. And so these highs are not really taken out by anything, or even if it's taken out, there's no real, momentum that takes out this highs. And the same thing also happens for the low. So this is called a ranging market. So this is not a trended market. So it's a ranging market. Now, if you're familiar with trading, some of you probably have heard the term that the trend is your friend, right? That is something that you probably would hear, across trading circles. The trend is your friend, something like that. So you probably would have heard of that the trend is your friend. And what that simply means is that if you're able to identify the predominant trend of the market, it is always to your own advantage if you try to position yourself to capture the lows and then trade it as it returns back in the direction of the trend. Now, some amateur traders, without the understanding of market structure, will find themselves trying to trade against the predominant direction of the market, and most of the time will be caught off guard. Now, that doesn't mean you can't make a profit, but that's simply, it's just for you to know that if you're going to trade against the market, then you must have additional skills that allow you to make sure that you're not trading. For example, let's say the market has reversed here, and then you see that and you say, oh, the market is reversing back, and then you start trading from here downwards, only for the market to now reverse and go against you, and you say, oh no, the market is fighting against me. Or some people say, oh, somebody is manipulating the market against me, and all of that. Well, the truth about it is that nobody manipulates, nobody knows you, nobody knows who you are or where you're trading from, and all of that. For most of the time. So it's basically just you and the market and your knowledge. So understanding market structure is super fundamental to understanding how, to trade and understanding how to form a bias in the market. Now, this was a quick recap, and I want to believe, you've been able to capture this. I explained this in the 2 free videos I have on YouTube on basic market structure and also advanced market structure. So I've really flogged this a lot there. So if you haven't watched it, I think that's also a good place to sort of understand how this also works. So for a trending market, for a ranging market like this, you wouldn't have trends, for you to say, oh, you're looking for break of structure and all of that. However, there are also ways that, ranging markets are traded. Some people trade the, they just trade the extreme. So if I discover that the market is ranging, when the price comes here, I'll just look for my setup and then trade it to the other end of the market. And then the same thing happens when it comes here. Since I know price is ranging, I'll just look for my setup and then trade it to the other end of the market. Now, bearing in mind that when the market is ranging like this, it's only for a short period of time. It doesn't mean that it's going to be ranging, perpetually. So the market can just be ranging like this, and before you know what, it will just break out, of the range. And then if you're not lucky, you can be caught on the wrong side of the market, right? But that's just for you to have this, information. Now, some people also call ranging markets consolidation. And what does that mean? Now, the price usually would do something like this. So let's say the market is ranging, and then you have this, then price comes to this kind of a place, and then the market begins to consolidate, and then it continues, and then continues to do that, and then begins to consolidate, and then before you know, it changes direction, and then begins to trend, and then begins to consolidate, and that's how the market basically, moves, right? So this is just price doing its thing, and the market or the price can decide to go any direction, whether for whatever reason, whether because of technicals or fundamentals, a major news announcement can drive price to any direction. It really doesn't matter. All you need to understand is for you to understand your market structure and how to position yourself in the market. Now, that said, we've been able to establish, our market structure and just give, basically just go through, the basics of market structure. Now, let's talk about a very important concept in trading, and that is called, supply and demand. Now, supply and demand, it's also foundational to how we're going to be trading and what I'm going to be showing you shortly. Now, I'm drawing all of this. I'm actually going to be showing you, all of this, how this plays out in the chart shortly. But let's understand the concept of demand and supply. Now, when you talk about supply and demand, in terms of the market, right? Let me just write that out. So looking at supply and demand here. Cool. Let me increase that. I want to believe, as I'm also using these tools, for those of you who are not familiar with it, you're understanding how they work, and then you can also utilize it, as you begin to use TradingView. Now, TradingView is the best platform to do analysis. There are people who use, in terms of trading, there are platforms called MT4, MT5, which some of you might be familiar with. Some persons use it for analysis, but I can tell you nothing beats TradingView in terms of flexibility when it comes to your analysis. We'll still be looking at MT4, which is the trading platform later down the road, but not now. So we're here. Anyway, so let's look at demand and supply. Now, when you look at demand and supply, now the concept of supply and demand, let's think about this in terms of economics, right? So when you say supply, that means there's a lot of availability of the goods, right? And then maybe because the goods are there, a lot of sellers, basically. We can also look at supply as, sellers in the market. And then we can also look at demand as buyers in the market. So how that works is that when you have a supply zone in the market, that simply means there are a lot of sellers in that zone who are looking forward. For example, at the top here, there are a lot of sellers who are looking forward to sell the market. And then the demand zone simply refers to an area where you have a lot of buyers who are looking to buy that zone up. So the market basically is always a war between sellers and buyers, right? And how that works when you think of the market is, if you go to the market, if, for example, you have a particular product you want to buy in the market, if you have a lot of buyers, right? Or if the product is cheap, then you have a lot of buyers, right? And usually when price goes down like this, that means price is now cheap. And then because price is cheap, you have a lot of buyers who would want to buy price from down here to move price up. And then when they now make a profit and they see that price, they've now made a profit and price is now at a premium, they will now want to sell and make a profit. That's just the concept of the market. So buyers look for when the market is cheap and they buy it, demand. Because they are buyers, there is now demand for cheap products. They buy it and move the market up. And then when the market is at a profit and then at premium, and they see that, they've made a profit, and what do? They now sell again, and then demand again comes in, buyers buy, and then sellers come in again and they sell. And that's basically how, the market continues to function. Now, in terms of your chart, how does that work? Now, remember we looked at, this was our low, and we had this push here that changed character, that took out this previous high, and that was a change of character. Now, when this happened, this area here became our area of demand. And what does that mean? That simply meant that a lot of buyers came in here and pushed price up. That's the simple meaning, right? So this became our area of demand. Now, after the market breaks structure, remember, I always say that after the market breaks structure, what do you expect? You always expect a pullback. Always. After the market breaks structure, you always expect a pullback. And for you as a trader, when you identify the trend of the market, the predominant trend of the market, you always want to wait for that pullback and then catch the low and then trade it back up. Right? That is always your expectation. That is always that's basically how you get to approach the market all the time. So after a break of structure, we expect a pullback to where? A pullback to demand. right? Sometimes it may come to your area, whatever you have has demand, which we're going to see shortly. Sometimes it may not come there, and then it just continue upwards. But basically, that's what you expect, that it will come back to demand, you know, so that buyers can buy it and then push it back up. So when price comes back, it forms a low and then returns and takes out the previous high. The new low is now called an area of demand. That's a new area of demand. And then price breaks, you know, the previous high, and then this new low will now become our new area of demand. And then this new low now breaks the previous high, and then this now becomes our area of demand. But what do you see? The market came here, and then it broke through our area of demand to form a new low and to change character. Now, that is basically demand. Now, supply simply means that price is at a premium. Buyers have made a profit and they want to sell off. So when they come to this area here, they sell off. When they make a new high, they've made a profit. What happens? They sell off. After they make a profit, what happens? They sell off. And that's how the market works. Now, we can illustrate this better in the downward trending market for sellers now, right? So let's look at this chart here. I think I drew one. Okay, I don't really have one. Anyways, but let's look at this downward trending chart here. Let me just add some, you know, some bars there. Okay, so what happens here? So sellers sold, came here, broke structure, right? Came to this low, made a high, and then broke structure, and then returned here. This area here that, you know, pushed for this break of structure where price, you know, a lot of supply came in here and then broke structure here, becomes our area of supply. And then price returned, this becomes our area of supply. And then what happened? Price, after breaking this structure here, pulls back up again and then breaks structure. Now this area here becomes our new area of supply. And then that is how, you know, it continues, right? So this is the basic concept of supply and demand. Now, with this in mind, let's look at this with respect to the chart, right? So I'm going to use the chart for today to be able to lay this foundation. So what I'm going to do is I have, okay, let me take out all those drawings I have here. Sorry, just excuse me. I'm just holding shift, okay, and then delete. Shift, I dragged my mouse and then I deleted that. Okay, so I have the 4 hour here. So let me expand this 4 hour just a bit. Okay, so this is January, which is usually a very nice time, right? So January, usually you have a lot of traders, they're back from vacation and then they're coming back to the chart, you know, to begin to look for opportunities to trade and all of that. And as you can see here, if you look at where my crosshair is, you can see this was 7 a.m. of yesterday, Tuesday. And you could see this large candle move, right? That was to tell you that, hey, a lot of activity is now beginning to come into the market. Now, let me break this down a little bit. Now, what I'm going to do is I'm just going to take out, let me take out some of these drawings I've done here so that you understand how do you even begin to think about, you know, drawing your zones and drawing the lines and all of those things. So let me just take out everything here, basically, and let's just do this afresh. Okay. Let me take this out. Sorry. Okay, so cool. Now you can see, sorry, I have this here. I usually use this for annotations. Okay, so you can see now, this is a bare bone market, right? This is just naked chart. And like I mentioned earlier, we don't use indicators, or I don't use indicators for trading, how I trade. And that's also something, of course, I want to show you, where you don't need indicators to trade. All you need is your knowledge of market structure, your knowledge of demand and supply, and mapping all of that out. And we're gradually getting there. Okay, so when you open your trading view chart, you'll see the same thing I have here, because this is the same setup. Let me just remove any thing here. So this is the same setup you're definitely going to see on the 4 hour for euro dollar, right? I also mentioned that I only trade the euro dollar, and that's for some reason. When I started trading, of course, I was trading lots of pairs, But then of course I was basically getting nowhere. That was a lot of distraction. I wasn't understanding the strategy. I wasn't fully, implementing the strategy and all of that. And I had to get to that point where I decided I'm just going to focus on one single pair. And I can tell you there's so much to be made on one single pair, than hopping from one pair to the other. So anyways, the euro dollar, and that's what we're looking at. So on the 4-hour chart, I use, the data feed from Forex.com. You can actually use different data feeds. I use data feed from the Forex.com. So we have that there. What else? So anyway, so our naked chart here. So let's try plotting this out. Now, starting from here, this is the 4-hour chart, but I think we can go to the daily to see what we have on the daily, right? So typically on the stats, when the week starts, I always love to view the daily chart to see, what's the predominant or the higher time frame, bias is like, right? So if you look at the daily chart, you see here, if you look at what my crosshair is, this was 26th of September, 2022. Obviously, we have been in a downward market, and then now we can see, obviously, the market has turned to bullish. So what does that tell you? The daily is now predominantly bullish. So we have that knowledge. And of course, I've drawn my zones, on the daily, I've drawn my lines, as you can see here. Now, let me just show you something. What do you see here? You see the market pulled. So let me use this. You can see the market came from here, pulled up here, right? Pulled back down, pulled up here, didn't really close, by the body of this candle. This was just a candle wick. It didn't really close by the body. And then it pulled back a little bit and then pulled back up and broke this previous high. And then what happens? It pulled back down again. And then you can see it broke this previous high. You see that? And then it pulled back. And then now the market is here. Now, what has happened here? You can see that this high here refused to break this, daily high here. And what has happened? The daily has now changed character here, as you can see. But this change of character that we have here, it's basically an internal change of character, right? So because, and why is that an internal change of character? I'm going to explain this later on, but just have this behind your mind or just have this somewhere. The reason is this was our high. This move here took out this high and formed a new high here. This move here hasn't taken out this low that broke out this previous high. So anything happening inside of this high, this new high that was formed when this low moved, is actually an internal structure. So that is why with this move down here and then a move here and then a move here, it took out this low here. This is just an internal change of character, not a major change of character. So until this low here on the daily is taken out, then we can see the daily has officially changed structure, because the last low that took out the previous high to form a new higher high has now been taken out, and therefore the daily has changed structure. But for now, it hasn't done that because this is an internal structure. I hope that's that's not confusing. So anyways, when you look at this structure here on the daily, move, impulse, correction. Now, a lot of people use different terminologies, impulse, run, and all of that. Just, you get the idea basically. So impulse, correction, impulse, it didn't really break above the high, a retracement, and then, a run again that took out that previous high. You see here, I have my line drawn to show that the daily broke structure here, right? And then we had a new high here, and then it pulled back a little bit. Now, what do you observe? It pulled back into a demand zone. You see this move here came, it didn't really close above this high, pulled back a little bit, and then closed, took out that high. And this last candle here, the last candle here that, that was more like the last candle standing before this run is now the demand zone. That means a lot of money came in here that pushed above this previous high to take out that high. And that's why that is called a demand zone. Now, that formed a new high here. And then we had this pullback here. And then this now moved and took out this previous high. What do you call this? A break of structure. And then now, you see, this last candle here can also be seen too as a demand zone. You can draw that. But you can see I have this area drawn because The market came here, reacted to this area, and then pulled back up before it now pulled down. So I marked this area as an area of, reaction, basically, more like an area of demand. Now, these candles here, you can see they have different colors. For me, the candles going up have, I shaded them, or I've chosen green and blue, and then the candles going down, I've chosen, what do you call it? Gray. Now, that's just for me. You can decide to choose any color. And I'll show you how to do that just in case you want to change your own color too and just use something that suits you basically. So, but you have here, so you basically just understand here from the daily how the market is moving in terms of structure. Now, this is very clear and we understand what the daily is doing. Now, let's leave this and let's go to the 4 hour since we understand our daily structure. But before we go, let me just add a daily, structure here. So I'll just choose my rectangle and then I'll draw this. I'll choose my preset. I already have my POI. POI means point of interest. So the daily, I already have all of this set. So I'll choose the daily. And how I do that is after drawing the candle, you can choose the color that you want for your candle, for your zone, for your POI, for the different time frames. You can choose your color, you can decide the opacity and all of that. You can decide everything. And then when you want to save it, you just come here, click on this button here, click Save Drawing Template As. And then when you, let me click on that again. When you click Save Drawing Template As, you simply just type in the name of your template, maybe daily. For me, I just do POI. And then I type whatever it is. You can say I have 1 minute, 4 hour, 15-minute daily and weekly. Those are the time frames I use all the time. So I have that already set and with different colors. So that's how you do it and you save yours too. So you can begin to build that. So now I decided to draw this new POI here because if you notice here, price came to this zone and then reacted. And that was what gave us this change of character here on the daily. So I'm going to draw from the low of this candle to this body here. And I'll choose that as chalk daily. Okay, you already understand how I do that now. So this is chalk daily. So I know there's an internal change of character on the daily, as you can see, based on what we have here. Now that is that on the daily. I'll go to the 4 hour now. Now coming to the 4 hour, you can see the daily zone I drew is now visible on the 4 hour. That's because I made it to be visible. And how do you do that? When you click on the rectangle, if you go to the settings button here, you go to visibility, you can see you have, you can determine where you want that, rectangle to be visible. Do you want it to be seen on the hour? If you don't want it to be seen, you take it out. If you want it to be seen, you leave it in place. You have something like that. So you can decide to leave it in place or take it out. For me, I usually will take it out because I want to draw my own 4 hour zone here. So I'll just draw the 4 hour here at the top. I'll just draw this and then I'll label it. I'll choose my POI, 4 hour POI. So you have that there. So I know that that's my 4 hour POI. Now you can see also my daily change of character. Internal change of character is also showing here. So I'll also make that, I'll make that not to be visible in 4 hour. And then I have that. Now on the 4 hour, let's begin to build our story. Now you can see from this that there's a move here, pull back, move, pull back, retracement. It didn't take out this high, pull back, and then you can see all these internal moves. You can see how price, was basically just moving a week here, basically, and then you can see this was around the break period, so there was no much activity, just price was just jumping around the place and just ranging without direction. Usually, professional traders wouldn't be trading in this type of situation. So anyways, and then by, yesterday thereabout, started having a major, major movement in the market. So traders are beginning to return to their trading desk. So you have this like this. Now, this might look confusing, but let's begin to give the structure, right? So what do we do? Let's start from this last high that we had here. So I'm going to just put my line and draw my line, and I'm going to pick my boss 4 hour. So I know it's a boss because the 4 hour has been trending bullish. So I'm going to pick, that. And then with this, I know that for this move that broke this high here, there has to be a demand zone. So already I have this, 4-hour candle. As you can see, this 4-hour candle, this last candle down here, I've drawn a demand zone there, as you can see. Now, why this 4-hour candle? Because if you use your rectangle or even your ruler and you put that here at the top, the last high that was taken out, and you just draw it down to the last candle, the low of the last candle, you see that the move that caused this break of structure was this last candle here. So that's why I'm drawing my demand zone on that candle, as you can see there. Now, what happens? You see here that price came here and then returned by wick and mitigated this a little bit, right? So I can just put that on that candle. And then what happens? Price, mitigated that and then reversed and took out the high. So I can still draw, again, this candle here that mitigated that and draw a zone there. And what do you observe? Price, after making a high, returned and mitigated that zone. Mitigation is another way of saying price retested the zone. So mitigated the zone and then returned and went high. And then what happens after price returned? You can see that price returned and tested this zone again. So I'm going to draw this on this candle here. I can decide to draw the whole candle, or I can just decide to draw only the wick of the candle because price reacted to that and then price moved up. Now, when price did that, what do you observe here? This high here was broken by this move here, and that's a break of structure. I'll choose my boss 4R, and then we continue. So basically, you can continue to draw your zones like that. So we have a zone here because this moved, but you can see price didn't return to mitigate this zone. So, but if you look at this, price came here, returned, and then broke structure. So if we draw this on the last candle down, you can see that price returned to mitigate that zone before moving up. And then if you narrow it down and you look intently on the 4R, you can also see that this last white candle here is an internal candle, right? You can see I drew a zone there and price return tested that last candle, this internal candle, before breaking structure. So I can draw that too as my zone. I can now draw this candle that pushed down before pushing up. I can just draw it as my zone and then draw that out. So you can see price now hasn't really tested that zone except yesterday when price returned. So this was created around the 13th of December, but you can see price did not retest it until yesterday, thereabouts, when price decided to come there and retest that demand zone. Now, with that, we have this picture with respect to price. Now, what do? We can continue to draw this out. So we see price came here, pull back a little bit, made a high, pull back down, and then made, a high by a wick. But this pullback here, I can decide to draw my line from this to the body of this candle, and I'll call that a change of character. But now on the 4R, I know that that is an internal change of character. Now, what do I normally use to identify this? I have this circle icon here, this love icon that you have here. I'll normally click this. And then I'll put this here, this last high that you had here. And I also have presets. So I normally have, 4R swing high or low. I'll select that. I'll do the same also for the last candle down here. The move, basically where the momentum came that took out this high, the last candle there, so that's my low now. So that's this is my swing high, and now this is my swing low, right? Now, a high was formed here, as you can see. So what does that tell me? So that tells me that this was my previous high. Momentum came from down here all the way here to take out this high. So that's my swing low, and then made a new high here and pulled back a little bit. Now I'm going to measure this pullback from this candle using the measuring tool. You can see that the total number of pips for this pullback, it made a high, then pulled back a little bit. The total number of pips is 64 pips. Now, for me, I look at, a pullback, a swing pullback. If I see up to 40 pips on the 4R, for me, that's I can consider that, as a swing pullback. Now, what does that mean? What that means is that I can now say that this break of structure here, this move here that took out this high, for me, it's a break of structure. And then this pullback here, I can now regard this as my swing pullback. For me, that is enough. That is basically how I look at the market, right? Now, and this has to be something that, as I'm doing this, I believe anyways, you're taking notes. Swing pullbacks for me on the 4-hour, if it's more than 40 pips, greater than or equal to 40 pips, I can consider, that pullback as a swing pullback, right? Now, some other people might have different criteria, but that's what I use and that's what I've tested and it works, right? So you just have that anyways in mind. So we have that. So now we're around this zone. Now, this was during the break, basically, and then a lot of chopping. You can see the market was just ranging, no clear break of structure. Everything was just basically just chopping around and all of that. Very terrible time to trade, though you can, of course, still find trades and all of that, which we're going to see shortly. But anyways, with this, you can see how I've been able to build, my bias or my perspective as to where price is and what price is doing. I've been able to draw my demand zones, as you can see here, and also with the explanations, the break of structure, my swing, high, my swing low, and also how I'm mapping, my break of structure, my change of character, and all of that, continues, right? So you have this. Now, if we continue just the same way, now we had this low here, and then this was also, taken out. So that low was taken out by, this pullback, right? And then this move here took out this low, right? Let me just make that a little bit big so you can see how that looks like. Okay, so we have that, right? So you can see price basically is just chopping around, okay? So we can continue to do this like forever. Take this line, and you can see this new low that was formed after it took out this low was not taken out by the body until yesterday. And that was since when? That was since on the 18th of December. That wasn't taken out until yesterday. But what do you also observe here? Now we have this long rejection candle here. You can see that there. Now, most people who trade, usually amateur traders, maybe if you've done some trading and you have some maybe some little experience in trading, most people say, oh, when you see a very large rejection candle like this, just enter a short position and then just drive it down. But you can see that theories like that don't always hold, because you can see this was a very large rejection candle with a large wick. And then what happens? Price just continues to chop, no real movement. Price just continues to chop, retested it before today, it now moved down. Now imagine holding a trade since on the 15th of December until today, before the trade actually, made a significant move. That's going to be a terrible, work on your emotions. So anyways, but trading with structure helps us to be able to get in and out, as quickly as possible, and all of that. So anyways, we have that, right? So we have this break of structure here on the 4-hour, as you can see here. Now that means the 4-hour has changed from bullish, right? And now it has changed to bearish. Now, mind you, sometimes I can subjectively look at this and say, well, even though this is a 40 pips pullback, I may decide not to look at this, as a swing pullback for different reasons. And I can still decide to say, hey, this is still my swing low until this low is taken out before I can consider that the 4-hour has now changed, bullish. So all of this, I can still consider this as internal structure, basically price just playing around and all of that. Now, we have all of this movement here. Let's now come to today. Now here around yesterday, so let me just mark this high here. Okay, so let me just put that. Yeah, so that's a high. So this break of structure here, sorry, let me use this circle 4R. Yeah, okay, so let me just put that there. So that's our high, right? Now market broke structure here. That means this was the low that got taken out. So this low got taken out by this move here and formed a new low here. So we also mark that out like that. Okay, so we have that. So what does this tell you? Now with this, we now have a new range that we're trading in. So I've marked the low that was taken out by this highest point here. And also I've marked the low point. So now we have a new range. So the price is now, basically playing within this range. Now, mind you, if you just go back in time, we took out all the drawings so that we're able to build, a bias as to what the market is doing. And now, not because we're going to be concerning ourselves with all of this, but because we want to arrive at this point where we're able to understand where we're actually going to be playing at for our intraday, trade and all of that. Now we've drawn this and we have this drawn out. Now with this, I can now decide to go to the 15 minutes to now look for intraday trade ideas. But before I do that, let me also draw something here. So look at this. You see, this low was formed and then price pulled back and made this high here. You can see this, right? Now, and then pulled back down and then broke, this high. So this is now, as you can see, an internal change of character on the 4-hour. Because this is our swing high and our swing low. Anything that happens between this swing high and swing low is called internal structure. So price made a low here, pull back up, then returned down, and then broke that high. So that's an internal change of character. So we've drawn that out and we know where we are with respect to that. Now, with this, we can decide to draw our zone, from this last candle down here and pull it down, pull it, across like that. And I'll put my 4-hour. So why do I do this? Because this was the low that took out this internal high. So this means that a lot of money came here that took out this internal high. So that's why I'm drawing this as my point of interest. I'm interested in what price does when it comes to this zone. So you draw that. Now with this, I think we have, sufficient, we've drawn our, our lines, we've drawn our highs, we've drawn our lows, we've, drawn enough, basically data on the 4-hour. We can now go to the 15 minutes. So let's go to the 15 minutes, right? So I'll just click on 15 minutes here, and then that will switch to 15 minutes. Okay, good. So now this is where we are. This is where we're at, on the 15 minutes chart. Sorry, all of these things I drew here is still showing. Let me delete this. Okay, I'll just leave supply and demand there. Okay, cool. So now you can see that this is our 15-minute chart. Oh, sorry, the high points I drew on the 4-hour are not necessarily showing here. But I'm going to also draw the same anyways on the 15 minutes so you see what it's like. But let's go back to the 4-hour again. Let me just make those lines to be visible on the 15 minutes so you can see how that works, right? Okay, so let me choose that 4-hour visibility, show me on the minutes. 4-hour visibility, this high, show me on the, 4-hour bigger structure, or let me even use that as my 4-hour, my high on the, I have a line I usually use to denote my high and low on the 4-hour. So I'll just say high. You can see to change to red. I think that should be visible on the 15 minutes. So I'll also do the same here. High, 4-hour, where is it again? Yeah. So I should be able to see these two lines on my 15 minutes chart. So I'll just switch to 15 minutes. Is it there? No, it's not there. Sorry. One of those things. So let me go back again and just make it to be visible on the 15 minutes. Visibility. Yeah, I want to see it on the 15. The same thing with this. I want to see it on the 15. Just so that we know the zone we're playing in. Okay, so on the 15 minutes, here we are. Good. So you can see it's a very large area. So you see the red line here, that's the 4-hour high and the 4-hour low. So you can see it's a very large area. Now, we know that everything that's happening now, we're playing within this zone. Now, mind you, we know that the 4-hour is majorly, changed bearish. However, internal structure has changed, bullish. So you can see that change of character on the 4-hour here. This is the line here. So it's showing here. I can decide to make this not to be visible on the 4-hour, on the 15 minutes, and draw my new 15-minute structure, but just let's leave that there for now. Now, good. So here we are. So today's date is Wednesday, right? So from yesterday, as you can see, just look at where my crosshair is on the screen. You can see this was this high was from yesterday around 3:30 p.m. UTC +1, right? So around 3:30 p.m. this high was made. And then what happened after then? The market started reversing. Now, for me, because of course my time zone is UTC +1, I only trade the London session and the New York session. And those sessions, just to also put the time here, let me just put that there. London session is usually from 8 a.m. to 5 p.m. Okay. And the New York session is usually from 1 p.m. thereabouts to what time now? I really can't recall whether 8 p.m. or thereabout. This might be wrong. This might not be right. Okay, just pardon me. Anyways, but for me, I usually trade between 8, right? 8 to 11 a.m. I look for setups. And then between 1 p.m. to 5 p.m. Yeah, I can take a setup between 1 p.m. to 5 p.m. Most likely after 4, I'm done anyways. But sometimes I'll be looking for setups, even if I see after that time, depending on the day. So anyway, so these are the trading sessions. Now, if you look at this high, this was around 3 p.m. Yesterday, right? That was Tuesday. Now, let's map the structure where we're at this low part here on the 15 minutes. Now, if you look at the 15 minutes here, this was a major move this yesterday from the morning session, this major move, and then price retraced here and then made a new low here. And then what happened? Price retraced back up here. You can see that was a break of structure, or a change of character rather, on the 15 minutes, right? And then with this change of character now, we now have a structure on the 15 minutes that can now help us to inform how we draw out our structure here. So let's try to do that. Now, I'm going to take out my rectangle tool here. Okay. And then, let me take out the line tool here. So this move here, I'll take this low, and then I'll draw this here from this low to this body. And then I'll call that a break of structure boss on the 15 minutes. I have that there. Now with this boss, the high was this, isn't it? Now this market, the market here moved, made a push to the downside here, made a low and then reversed. So that means this high was taken. So I'm going to take my tool and then I'm going to draw this out. And this for me is going to be a change of character. Okay. Now, I wouldn't want to, now I'm trying not to, dump a lot of information that might confuse you at the end of the day. Because if you look at my candles here, you can see all these gray candles are my down candles. The blue candles are my bullish candles. However, I have some of these white candles, and these white candles are called internal candles, right? And sometimes this change of character here, I may not necessarily draw it here. I may actually draw it maybe around this internal candle here, and there are reasons for that, okay? Which I would explain later, but I don't want to bog you so much information that might just confuse you for now. So let's just deal with the basic structure for now, okay? So this move here, this was a break of structure to the downside. This push here meant that this was now a change of character. The 15 minutes has now changed character. Now, what does that mean? I can now draw my 15 minutes zone down here from this last candle. I can draw a 15 minutes, and I'll also just my 15 minutes POI first. So we have that there. This internal candle here, you can see price. Let me show you what's happening here. Price from this low made a high here, and then pull back down here, and then made a high, and then pull back down. You can see internal structure. Now you have to be very delicate with all of this, understanding how this works, and then made a high here, and then pull back down here again, and then made a high, a little pullback, and then made a high. Now this is a lot of internal structure. that's happening here. Okay. And that's why I was saying that sometimes I might decide to draw my change of character from, these internal candles, that you have here, instead of just drawing this high here. But I wouldn't bug you with that now. Later on, we'll get to all those intricacies. So anyways, we have that. Now, we can now draw our point of interest. We have this line here. Well, I've already drawn a zone here, point of interest in the 15 minutes. I can still draw another one from this internal white candle here if I want to. Okay. And also I can draw, you can see the price pulled up here and then pull back a little bit before moving up. Now that pullback, what does it mean? You can see this candle here. This was the low of the candle, right? And then this candle that moved back took out that low. So that's a pullback. It took out this previous low. That's a pullback. And then this candle also took out this previous low. So that's a pullback and then a move up. You can see that. So because this is a pullback, you can see price came to that pullback zone and reacted to it and continued moving upwards. Now, let me just draw that for us. So you can see from this pullback here, this last candle, I can just draw this as a zone, basically. Okay, so we have that now. So you have that zone there. Now, this was 3 p.m. After 3 p.m., what happens? You can see price, New York session, came back down, tested this zone. By 5:15, I'm not trading the market. So any price action here is not something I'm concerned with. And then it continued all through the night until around now 7 a.m. in the morning. Usually by 7 a.m. I'll be on the chart around here. I would have already been on the chart. So I would have drawn all these zones and I already know where price is. And by 7 a.m. here, I'll be on the chart anticipating a move that would give me, entry into the market. So with this, now what am I going to do? I have already seen that price has changed character here. So my expectation, and already because price has changed character, price has reversed to mitigate this zone before moving up. Remember that I talked about, market structure, how you trade market structure. You're always looking at if price is moving like this, you want to see how you can catch this move. Because now look at this, price moved down here like this and then broke structure, right? Change character. So you want to see how you can catch this pullback here like this, pull back. So you want to catch this move here so that you can now trade it and now break structure here. Now imagine if you saw this, move down, break of structure, pull back, retest POI, and then break structure. Basically, that's how price moves. So your intention is always to catch this low here. And that's what price has done. Now, this was Asia session, so I wouldn't be on the chart trading. And of course, as you're learning to, I wouldn't want you to be on the chart trading Asia session because that's not the way I trade, right? So now with this, by 7 a.m., I know that this is where price is. So what am I expecting? I'm expecting to see new structure form before I take a position in the market. So let's see what happens. Now, with this is a very, the by 7 a.m., my price was here. And what happens? Price pull back a little bit, no real structure for me to trade. And then it, continued upwards, right? Now, I have there's something called confluences that I used to trade, right? Confluence means what do I want to see before I take a position, right? There has to be something that you see, and that's what we're driving at. Eventually, I'm going to show you my setup for trading, my trade plan, my strategy and all of that. So confluence simply means what do you need to see before you take a trade? Now, amateur traders, when they see markets candles moving like this, I remember I used to do this when I started trading. I'll wake up in the middle of the night and then I'm looking for an opportunity. If I see a candle moving like this, I'll just put it by, and then the candle will start reversing. I'll say, somebody is, hunting me or something, but that's just complete ignorance, right? So to really understand trading, you need to have a plan, a strategy on how to trade. Confluences, what do you need to see before you trade? One of the things you need to see, number one, is market structure. You must be able to map your market structure effectively. If you can't map market structure, you'll always be caught on the wrong side of the market. So you must be able to map market structure, know whether the market is trending upwards or the market is trending downwards. That is super important for you to understand the bias of the market. So you must understand market structure. Number two, you must understand supply and demand. you must be able to understand, okay, where's my point of interest? Now, the market has broken this previous high. Where should I draw my POI? Where is the market likely to respond to, and all of that? So you must be able to understand that. And then, of course, you must now be able to look for other additional confluences for you to trade. Now, I'm going to show you something. I really want you to pay attention here, because this might fly over the head of a number of you if you really don't pay attention to this. Now, I tell you that I only trade between 8 a.m. to 5 p.m., 1 p.m. to 1 p.m. and 5 p.m. I look for trade opportunities. That doesn't necessarily mean I have to trade. I don't have to trade. I look for trade opportunities. If I see something that meets my trade plan, then I take the trade. If I don't see it, I don't have a trade for the day. Now, between 8 and 11 p.m., I look for opportunities. Now, by 7 already, I'm already on the chart. As a matter of fact, sometimes before 10 minutes to 7, I'm already on the chart to draw my structure, to know where the market is, and to anticipate moves and all of that. So here, again, 7 a.m., right? I'm already on the chart. So I'm looking at this. Now, what do I look for? I usually look for something called sweep or liquidity, right? So during the Asia session is really between 1 a.m. UTC plus 1 and 6 a.m. UTC plus 1. So here you can see that this candle here, if you look at where my crosshair is, this was 3:45 a.m., right? If I look for where 1 a.m. is, you can see that this candle here, this was 1 a.m. So I'm going to draw this Asia low here like this. Pay attention to this, because this might fly over the head of quite a number of you, right? So then I'm going to also draw my Asia high. What was the highest point during the Asia session? Asia session ends by 6 a.m. So I'm going to draw that there like this. Okay. Okay. So we have that there. So Asia session, Asia high, Asia low. Now I have a number of confluences I usually look out for. But at the basic minimum, for example, if I have a structure like this and it's already 7 a.m., what I want to see is the market take out this low and then form a structure, maybe a chalk, right? A chalk like this one. That means it comes, let's assume this was Asia low. I want to see the price break, take liquidity. We call it liquidity, right? Take out Asia low and then change character. Before, if the price now retraces to my POI, I will now look for entry. That's usually what I'll look out for in the mornings, right? Now, but you can see around 7 a.m. today, price did not do that. Price just simply pulled back a little bit, and then took out this low of this candle here and then continued upwards. Now, seeing this doesn't disturb me at all, because this doesn't meet my what I'm looking for. So I don't really, I wouldn't jump into the trades and I want to make money and all of that. No, trading is really patience, right? I'm going to get to that sniper entry and all of that speed, patience and all of that. So, but for now, just understand this. So I usually want to see this low taken out before I look for opportunities. Now, but that did not happen. Price just went away like that. Now that's perfectly okay, right? So I'm going to take out this visibility of this on 15 minutes. Let me draw now. So this took out this high. Price just took out this high in the morning around 8:30 a.m. You can see this candle pulled and broke the structure. So I'm going to say boss 15 minutes. So you can see this structure, this was taken out on the 15 minutes, right? Now on the 15 minutes, in terms of structure, we can draw this circle. This is the top here. I'll choose my 15 minutes high lows. I'll do swing. Yeah. The same thing also, I'll choose the low. This was the lowest point that took out this high, because price came from here all the way and took out that high. And then what do we have next? I'm going to now draw my high here. You can see that, right? Okay, cool. So we have this. Now you have a fair understanding of, Now with this, I believe you have a fair understanding, of course, of structure on the 15 minutes. Now, what's the time at this right now? It's around 9 a.m. And you can see this large candle, 9 a.m. UTC plus 1. This large candle was formed. What happens after this? Price pull back a little bit. And then, this candle had left a large wick here. I'll just use that as the high. And then, we had this move down here. All these candles, basically, this candle took out the low of this candle. This candle took out the low of this candle. this candle took out the low of this candle. So this is one big move down, right? So, and then it reversed up. So what are we going to do? We're going to bring out our line and take this low here and draw it to the right. And then you can see this candle here broke this low. So I'm going to put that as change of character, 15 minutes. So morning, we started from 7 a.m. This moved. We've drawn our structure. We know where our swing low is, our swing high and swing low. Price has broken structure. We have our high here. Price pull back a little bit, mid, a high here, and then, broke structure here. We've drawn that. So we know that internally, the 15 minutes has, started retracing. Remember, after price breaks structure, what do you expect? You expect a pullback, and that is what has happened here. This is now a pullback. Price broke structure. It's now pulling back a little bit. Now, you want to see how you can also catch, a trade if possible. Now, when price is pulling back like this, because we know the predominant structure is bullish, this structure that is pulling back like this is actually counter trend. Now, you may know what they call counter trend, right? But I just want to show you. Now, when you're starting off, I wouldn't even advise that you trade counter trend, but I just want to use this to show you basically how this works, how to catch a trade. In this situation. So now this was a change of character. Now we can now draw additional structure. So let me draw this. So this high here, produced, the push that actually took out this low here. So I'm going to draw from this candle. Since it's a week, price has already returned here. So I'm just going to draw, this like this. So I'll draw the entire candle, right? Okay, now let me use a tool, because if I want to show this, let me show you how, I build the story, right? So let me just use the replay candle. So I'm going to take out this candles, all these candles, assuming, for example, this was what was happening in the market, right? And this is usually what's going to be like, right? So we saw price made a high here and then price pull back. And then you can see this price took out this low here, a change of character on the 15 minutes. So let's continue playing the candle. Now, when I see this, right, the way I trade, after I see this change of character, because I'm expecting price to pull back, when I see this pullback, I will not just jump and say, hey, now price has broken structure, price is pulling back, I'll just jump in and then I'll trade it back down. No, that's not how it works. I will still want to see structure. Structure is king for me, right? And that's also something you should have behind your mind. The structure of the market is king. So you have this, price breaks this low. You can see this candle here. Now, what would I expect next? I would expect a pullback into this supply zone. Remember, you have here, your structure when market is basically doing this, right? When market takes out a previous low, what do you expect? You expect a pullback to your supply zone before you look for opportunity to sell to this zone, right? So now, since price has taken out this low, I'm expecting price to do what? To pull back before I look for an opportunity to sell in this zone and then return price to this. That's literally what I'm doing. Now, because I didn't see all of that in this zone here, if this price action after this break of structure and price return here, if this was already morning, London session, I would have been looking for a buy opportunity here. But because this was Asia zone, I'm not up in the morning. I'm not looking for opportunity here. I was expecting, to see structure here, but that did not happen. So I didn't have a trade. So now around 12:30 p.m. today, you can see price now took out this. So I'm looking for a pullback and then I'll look for opportunity to sell. So let's see if we get an opportunity, right? So let me take out this drawing. Okay, good. So let's play this candle. Let's see if price returns to this zone. Okay, price doesn't return. Another 15 minutes candle. This time is 12:45. 1 p.m. Nothing happens. Now New York is coming into session, right? It's already morning. Then you're having traders now at their decks. Okay, 1:30 p.m. UTC +1. 1:45 p.m. Okay, price is still hasn't returned to the zone, so no trade yet. 2 p.m. Okay, 2:15 p.m. It seems price is going to return to our zone. So we're excited because we know we might have an opportunity. And then bam, 2:30 p.m. price has returned to, has mitigated or is now retesting our zone. So now all of this does not matter to us for now, right? Because we're only interested in what is happening here. So we can zoom in now. So price has returned into our POI. So now we know that based on our structure, this low was taken out, right? And then now price has returned, perfect setup that we're looking for, to look for opportunity to sell from here down. Now, what do we now do? This is a 15-minute chart. We now go to the 1 minute chart. So I'll go to the 1 minute. And then on the 1 minute, you can see what it's like on the 1 minute. Let me zoom out. You can see on the 1 minute, this line here was the 15 minutes break of structure. We waited for price on the 15 minutes to come back into our zone. And now we're now here in the 15 minutes. So what do we now look for on the 15 minutes? Now, we've always been looking out for structure on the higher time frames. On the lower time frames now, the 1 minute is my execution time frame. I will also want to see structure play out. Now, on the 1 minute, what do we have here? You can see here, price made a high here, pulled down, made a high, pulled down, made, let's call this a high, and then pull down, right? So price is just playing here. Now, for me on the 15 minutes, there's something I want to see, and I'm going to show you what I want to see, right? Now, this is exactly how I trade the 1 minute. And what I want to see is this. I want to see something like this. Price comes into a zone, pulls down. I want to see something like price comes here, doesn't take out this high, comes here, doesn't take out this low, and then reverses a little bit, and then boom, it takes out this low. Now, what does that mean for me? Now, this means that price first came down here, tried to take out this low, but rejected it. And then price, all of a sudden now took out both this rejection and this previous low. And that tells me that now price is ready to make a move downwards. Now, let me show you how that works exactly. Let me draw it. Let me draw it, using this tool here. So we have here, price comes in here like this, and then comes here, tries to take out the low, fails, and then returns, and then it takes out the low. Now, for me, when I see this is like, I'm just excited, right? Because this is my setup. Now, this setup might work or it might not work, but it really doesn't matter, because at the end of the day, I've backtested this. And I'm going to tell you more about what backtesting means. Backtesting simply means if you have a trading plan, you test it in the market, you want to be sure that it works. And after you've gathered data, you can now execute it without being afraid, because you know that if it works, you win. If it doesn't work, you lose, but it doesn't matter because it's your trade plan and you know that it's going to work. Eventually, you have an edge and all of that. So we're going to get to that anyways. So when I see something like this, what I'm now going to do is I'm now going to, this low has been taken out, right? Price has taken out this low. This rejection here has been taken out. This is a flip. We'll get more to that. Now, I'll now expect that price will return to this sell zone. This was the zone that pushed price down. So I'll expect that price will now come back in here. Let me just change the color of this. So I'll expect that price will just come back in here. Uh-oh, that didn't work. And then if it comes back in there, and then it will now tag me in, and then I'll now drive price down, and then I'll be in profit. This is what I want to expect to see. Now, let's see how that plays out here. So this is now our low. So we're going to draw this. Guys, this is gold mine. I'm showing you guys here. Okay, so this is the low here. So you can see that price came here. So I'll draw this, price returned, came into this zone, pull back a little bit, and then pushed in again. So let's play the candle and see what happens. 2:44 p.m. 2:45 p.m. nothing. Continues. Okay, 2:47. Oh my. All right, so 2:48. You can see it has now broken this low. So usually, now because of illustrations, of course, I'm going to be drawing this, but if I'm trading, I don't need to be drawing this because I can literally just see it happening, right? Now, I will draw this line. That means the price has broken structure. This rejection here, you can see price came up here, came here, rejected before pulling down. So I'm going to draw this to the body of the candle. And this is called a failed rejection, FR, right? And then this here, you just call it, this is, of course, a change of character on the 1 minute, right? So you have a change of character here. So this is it. And then what will now happen, I will now use this Fib tool, Fibonacci retracement tool. I don't use it the way some other people use it. So I'm just going to put it on the last candle here, as you can see this, or if I want to be safe, I'll put it on this last candle of the rejection, and then I'll draw it to maybe this candle down here, you know. I'll just draw it like this. And with this now, I now have my zone. So what am I expecting next? Remember, price has broken structure here. What are you now expecting? You're expecting a reversal. You're always looking for market structure. You're not guessing. This is a mechanical way of trading. You're not guessing. You're not hoping. You're just trading your plan. It may work out, it may not work out, but you're following your plan from the high time frame, 4 hour, 15 minutes, you're from daily 4 hour, 15 minutes, and then the 1 minute. You're simply just following a plan and a strategy. So price breaks this. And what do I expect? I expect that price should come back here. Now, price may do that, or price may just continue going. Now, that would be unfortunate because that means I wouldn't get a trade, right? But if price comes back here and then it will tag me in, and then hopefully I get into a trade. So what am I going to do? I'll pull out my short position tool here. You can see down here. I'll pull that out, and then I'll put that here. Now, sometimes I'll put it in the middle here, the Fibonacci retracement tool, and then I'll put my stop loss, my stop above this, this flip. Price came in here, rejected, and then, before moving down. So that's a flip zone, right? So I'll put my stop loss above that zone, as you can see here. Now, at minimum, I'll always use a 2 pip stop loss. Now, you can see this pip is too close, so maybe I'll just use a 2.5 pips, right? Now, that's a very narrow pip, right? But I expect price to come in here and then push me in. Now, this is what is going to happen. Now, most of the time, by default, I'll always target a 1 to 5. That means at minimum, I want to have I want to 5 times my risk. So that means if I'm risking $1,000, I want to make $5,000 in this trade. That's the meaning, right? If it goes against me, I lose $1,000. But if it goes in my favor, I make $5,000. That's the meaning. Now, how do you place your entries? Now, this is very subjective. Now, if you look at this retracement tool here, you have the middle line here, which is called the equilibrium, right? The 50-minute point. So if I double click this, I click on the settings button here. Let's look at the coordinates, or sorry, the style. Now you can see you have the 0 point is ticked, you have 1 is ticked, you have 0.5 is ticked, right? So you have all of that on the tool here. I've selected this just based on how I trade. Now, sometimes I want to enter at the 0.236 position here. Sometimes I want to enter at the 50 minutes, at the 0.5, position equilibrium there. Sometimes I want to enter here at the distal, or 0 point or whatever, position here. It all depends on how you want to trade, because sometimes price can do this. Now, this is what price can do, right? This is really the beauty of trading. When everything begins to come together, you're not guessing, you're not hoping, you're not gambling, you're simply following a system. And you don't have to regret when price doesn't do what you want it to do, because price doesn't have to do what you expect it to do. Now, price can do this, come into this zone, tap this edge here, and just continue. And unfortunately, I won't be tagged in and I'll be in a loss. Or price can, price can come into this zone, tap this zone here, and then continue, and then I'll be in the trade. Now, price can do anything. So you have to be, at the end of the day, you have to test this in the market to be sure and, to ascertain what really works for you and what you're willing to live with, right? Because if price, after you've done all this work, and then price comes and taps the edge and then just continues and leaves you out, you'll be in pain. That's the truth, right? You may wish, oh, how I wish I actually put my entry here, or I put my entry here, I put my entry here, and all of that. So anyways, that's that. Now, for me, I'll just leave it here at the 50, 0.5, line here. I'll just leave it at the equilibrium there. Let's see what happens. So let's play the candle. 248, okay, 249. Let me move this and see. 249, it seems to be, reversing. Good. And then 250, we're in. Now, when this happens, price can break through our loss, can completely reverse and take us out, which is perfectly okay because we followed our trading plan and it didn't work out, and that is perfectly okay. There's no regrets at all. Or price can just reverse and give us our sweet 1 to 5. So let's see what happens. Okay, price is reversing, and then let's play it. It continues doing that. Now, for amateur traders, when they begin to see something like this, like price has come down and then price is reversing, they begin, you get fidgety. You be, oh, price is going to reverse, against me. Let me take my profit. Let me take my $1,000 because this is most likely 1,000 plus. Let me take my $1,000 and all of that. And that is how you continue to destroy your psychology. We'll talk about that later. But well, you trust your system, trust your analysis, and let the market do what it would do. So price continues to play. Bam, you can see. And then around 3 p.m., price has hit our target of 1 to 5. Clean price action. And this was a trade that happened today, right? This afternoon. And this is basically how, I trade the market. Now, if you want to take more from the market, of course, you can decide to target this low. But remember, because this was where the 15 minutes reversed from, so you can decide to say, oh, I know that this low is going to be taken out. This is going to be broken. So you can decide to say, I want to trade this. But mind you, it may happen. It may not happen. It's, price can decide to just reverse. But let's see. So you see it's reversing, and then, it completely goes against us, and then it takes you out. So price can actually do that sometimes, and then, you just leave maybe a winning trade on the table and all of that. So that is why it's always good, you have maybe a fixed, sometimes you can just have maybe a fixed, profit you're willing to take. And then when that happens, you're satisfied. Maybe you say the first trade in the day is going to be 1 to 5. The second trade is going to be 1 to 5. The next one, I can decide to target maybe 1 to 10. If it works out, it doesn't work out, it doesn't matter because I've already gotten 1 to 10 already in the day. So that's perfectly okay. So, but that's how you basically trade the market. So, ladies and gents, I believe you've been able to learn a thing or two from this. Building multi-time frame. We started from the daily. Remember how we started from the daily? Let me just go back, to just show you, how far we've come. We started from the daily, looking at the analysis. We went to the 4-hour, to build our 4-hour structure. You can see all this price action is just that all the little things happening around here. We're able to catch a 1 to 5. And then on the 4-hour, we now decided to go down to the 15 minutes. And of course, aligning the 15 minutes with our trading time, it happens to be the New York session, right? And then, after the break of structure here, we expect that price will come back to our point of interest, and then we'll look for an opportunity to trade, this counter trend. Now, the reason why sometimes it may not come and take out this low is because this is a counter trend. This is not the predominant trend of the market. So those large moves, may not necessarily happen because the price can just decide to pull back a little bit and then continue upwards. So that's why it's a counter trend. So that's why you may not want to say, oh, I'm doing a target, that, okay, I've seen structure now. Price is going to come back, test this. I'm going to take this out. No, a counter trend, price can just continue going up. So basically that's that. So from the 15 minutes, we went to the 1 minute, and then we're able to, build the same market structure, no guesswork, patiently waiting like a sniper, literally waiting for the right opportunity, building our structure. And then, we got tagged in, and then we got our sweet, 1 to 5. Now, 1 to 5 is a lot, depending on, for example, how much you're risking. You can imagine if you're risking $1,000, you made $5,000. If you risk $2,000, you made $10,000. That's a lot, right? But guys, it's going to take a lot of patience. It's going to take a lot of practice for you to get to that level where you're able to actually understand how all of this works. What I'm just going to say to you is you started this, don't quit. In the next 1, 2, 3 years, even if it's going to take you 5 years, guys, I think this is something you should take your time and commit yourself to. People go to university to go study engineering for 5 years, study medicine for 7 years, study law for 5 years. And when they come out, a lot of times, the jobs are not even there. They even pay well. Now you're looking at a skill that with this kind of work, if you understand how this works, you can be making this type of, return in a month. Just you, your computer, and your phone. I tell you that this is life-changing. So this is worth staying are learning, even if it's going to take you the next 1 year, 2 years, 3 years to master this skill, it's going to be a skill that you're going to have for life. So it is worth really just staying and understand how this thing works. And hopefully, it begins to pay off in no time. So we've taken a lot of time. I think over 1 hour, 30 minutes. This should be the longest session we've had so far. I want to believe you've gotten a ton of value from this. We're not going to have any question and answers. We're going to have our question and answers on Saturday, right? So if you have your questions, please just keep your questions, and then on Saturday, hopefully I'll be able to take your questions. What I'm going to do is I'm going to publish this chart. Let me just even do that. I'm going to publish the 1 minute chart, the 15 minutes chart view, and also the 4-hour view. And I'm going to share the link. I think I'm going to share the link in maybe I'll share it in the Telegram, so you guys can just download it from the Telegram, right? So I'm going to publish all the 4-hour charts, the 15-minute chart, and also the 1 minute chart. I'm going to publish on the Telegram, so you can also just take it from there, and just study it, and then continue to internalize all that we've gone through. And that's it.